Okay, we're getting started here. It's Friday, the or I'm sorry, it's Thursday, the 17th today of December, and we're just had the interest raised yesterday. Interest rates raised yesterday by the Federal Reserve. So we're going to watch and see if we get some decent volume coming in off the opening and what the reaction is going to be. Are we going to get a Christmas rally here? In other words, are they going to keep supporting the market as we get going and see if the market's going to crank up into the Christmas period? That'll be exciting if they do. We'll sure look forward to it. So for right now, let's check it out here. We've got the opening getting a spike move lower here with the Dow up slightly right off the opening. So the first thing we want to do is check the volume here. Now, coming in, this is a West Coast time, so 6:30 is 9:30 Eastern. So coming right in off the first few minutes, they're blasting up 1,600 contracts average here, 1,300, dropping down a little bit now, but that's a pretty decent opening. Shows a lot of enthusiasm for trading the markets. We'll keep an eye on this and make sure that they hold up in general for the first hour or so. Maybe above 500 average contracts. This is the shows the four period of the average of volume. I'm using 1 minute charts, so it's the average every 4 minutes smoothed. And these are the individual volume here. So we'll keep an eye on all this as we get going here. So it looks to me like if we get some kind of slight bounce going here, we're going to want to take a short trade. You can see this is a Boomerang day trader chart, which is software I developed many years ago, and it's quite popular. It works really well. It's many ways to read the markets. We can see we're getting a crossover here on the DTB. So we're going to want to work the short side here on this early crunch to the downside. So let's see if we can get a move. I'm going to take an early trade if we get a move up to 76.75, which is not far off. So let's see if we can get a jump up to the 77 area here for an early trade. Or if they just peel off to the downside, then we'll give it a little time here and wait and see, because I still want to get our opening range markers in there and check a couple other things. But I do see an early trade developing here, so let's stay ready to go short right around 76 or higher. We're pretty close to that here, so stay ready to go long or short, going short. Stay ready here. Let's see if we jump them up towards 76.50, 77 area here. Okay, here we go. Short at the market right there. Go short at the market. 76.50, 76 even, 76 quarter, and we're looking for a trip down to 73.50. Short at 76.50, and we're looking for a trip down to 70. Move it down to 73, take them out at 73 quarter there. There's 3 points there for you. Good deal. Always nice to start out the day with a winning trade. I had 76.50. Our auto trade got 76 quarter. That's why I said to just roll it back to 76. But anything you got in that area is good. So we're going to just that was off that first momentum blast to the downside there. So let's go ahead and get the opening range lines in. Now let's see if my blue lines lasted. I changed the chart. Ah, they're gone. Okay. So we got a little homework to do while we're waiting for the next trade setup. Nothing to do yet. Let's let the first next 10 minutes go by. We'll just analyze things here. So, okay, here we go. First thing we want to do is mark the opening range. We're going to need a bunch of lines here, so I'm going to just fire a bunch of them off. Here we go. Okay. Bear with me. I got a little bit of work to do because all the when I did some changes in the charts, all the lines got erased. So that I usually have my opening range lines, and we had some key levels marked. But after yesterday's blow up move, we got to redo all those anyway because I keep them on there as long as they're valid. But then when the market makes major shifts like it did to the upside yesterday, then we got to redo the levels just to make sure they're vital and valid for what we're trying to accomplish. So these will all, I'll just do three of them. These will all be blue. I like to use this azul kind of cyan color here. It really sticks out nice. Just reminds us, hey, this is the last place they supported or resisted the market, so we can take an extra look at our indicators at those points and see if we should be doing something with them. Okay, so first things first, let's get this opening range marked here. This is the opening candle right here. So clearly the high is this opening candle. And then we've got coming into the first 5 minutes, the low, we'll mark the low right here. It doesn't have to be exact, and this is a tick chart, so it's not going to show the exact minute. All right, there's the opening range there, 71 to 82. That's 11 points, so 5.5 points from 82, or 5 points from 71, is 76.5 is going to be about the center of the opening range. We mark the center of the opening range. So that's about close enough. Doesn't have to be exact, but that's the center of the opening range. Let's see if they try to crawl back into the opening range. So now that we're here, let's mark some key levels and make sure this is a support here on the low. We'll keep that one in. The yesterday's high, these are going to have to expand because they're a little too tight for what I like to see here. And then let's get this one going down to that very first support level area. So in other words, if they pull back today, 4,600 is really where it is. 4,600 handle, I'll just mark that plus another point, couple points there. That's the initial support area. That was kind of a pullback area from yesterday. And then we've got the blast that occurred on Globex to the downside. And that appears to be coming in yes, perfect. Okay, these are enough levels for now. Should there be a pullback where they really sink their teeth into it, they better hold this 45.90. Then we have 4,600, and you can see that sandwich is in the range there during the early chop period, which was very extended. But this was because everybody was waiting for the Fed announcement. The Fed announcement broke out to the upside, broke down, and then rallied back up above 46.03, punched them higher, and went choppy into the close. And then, before the close in the last hour, they took them up, made this big rally we saw yesterday with the Dow up 225, I think, 222. I see my page, but it's way down there on the floor. I just don't want to reach down yet. I want to get us going with some more trades here. So still nothing to do yet. Still watch, see if we get a reversal buy trade going here. So everything's looking good so far. Okay, let's open them up here and get into trading mode. All right, there. I always like to keep them nice and wide open. You should be able to see everything. When I see these rooms and things, because I'm always experimenting and looking around to see what everybody else is doing, and most of them, they all got this type of deal going. It's horrifying. See, we're long here, we're long, and you're going, where? You can't even tell. Like, I'm all scrunched up. That's usually the frauds. You got to watch out for that. Cover their tracks. but I like to open them nice and wide because we make crystal clear calls in the room here, crystal clear trades, and we back it up and verify it with the live accounts that are done in the auto trade and on my time and sales. So overall, we got a very a crystal clear approach to how we're trading the markets. All right, so a little homework, getting those level lines in there. They're looking good. Now let's see if they can bounce the market up here, see if they're going to try to turn things back to the upside. We've got the I follow the 5 minute, the higher time frames, which I consider be the 5 minute chart, the 13 minute, the 30 minute chart, and 60 minute. Now above that, you've got the 135, which is a much bigger picture, and that's still kind of in a bullish chart pattern, a neutral algorithm after this pullback here. We've got same with the 60, a bullish chart pattern, and the 30, both bullish chart patterns with a neutral algorithm. No sign so far of them deteriorating to the point of turning super bearish, so we'll keep an eye out on those. But we do have the 5 minute bearish with a brand new bearish 5 minute chart. 13 still barely holding a bullish chart pattern, but we do have a bearish algorithm candle coming in on the 13 minute chart. So we got to keep our wits about ourselves here. Over here on this screen, you see this is called the high five, the Dow Jones Industrial Average, the Composite Index Cash, Transportation Index Cash, the Trend Advanced Decline, which is the advancing issues on the New York Stock Exchange, the decliners, and the net total, which is very light. It's down just 112 issues. So far, kind of a neutral market. The problem right here is this trend. This is a bearish trend above 1.30. So the market's still getting pounded out a little bit here, which makes sense probably because of this trend primarily right now. Just checking some of the other instruments real quick here. Crude oil's not going anywhere. Gold's getting pushed lower, which it's actually crashing practically speaking, which is kind of a drag. I get sick of that with all the things going on. You'd think gold would get a little bit of teeth in it, but it's not. So that's just the way the mop flops. And emerging markets looking good here. We're long emerging markets in China, watching to see if we get some action in the EWZ, which is the Brazilian market. These are all long-term holds that I do in my private hedge fund with my partners, so we manage some private money. A hedge fund simply means that you can hedge the portfolio, you can be long, you can be short. A lot of mutual funds are strictly long. They're just all long in the stocks. But hedge funds can do different strategies to run the portfolio. So sometimes I mention these things only as things for you to research if you want to take a look at some of those ideas and they're all longer term ideas in most cases. Okay, let me fix my sign here. We are waiting for the next trade. I don't see anything extraordinarily bearish, so I think we'll get a buy reversal at some point in here. I have this little sign here in case I just kind of take a break and we're waiting between trades. Now, I do see some signs of a possible reversal on the buy side here. I'm not going to try to catch a bottom or anything here on this trade. I just want to see if they reverse naturally, how they reverse naturally. I mean, for bottom fishing right in here, I would say this is probably very close to a bottom. I'm not going to call it, nor am I going to trade it just yet, but it appears that right in this area, right in this area should be close to a bottoming level. Now we did move below this one blue line here, so we're just watching. The next level would be down here at 46.5. 4650, 4,650 on the mini NAS futures contract. So let's see here. Um, Again, I'm not going to. Sometimes I do that. I'll take a shot on a bottom or a top, and they're riskier trades, but you can often catch a larger scale move from those. I'm not going to do that with this one because um, I don't know. I just don't feel like it today. I just, you know, maybe they're going to reverse here. If they do, we'll catch them on the reversal. Let's see what happens here. So my call was for like 46.62 to 63 as a bottom. Let's see if they can catch some support down there and keep ramping up, or if they want to just pound the downside a little bit more. Would have been a good trade grabbing 63, but that's okay. We will do those. We do them frequently, but they're higher risk trades, and I'm just waiting to see if we can get a turnaround here. A turnaround to the upside. Let's see what we got here. We have to wait for some other key elements to kick into place. We'll have to see the prices move back. Most likely, they'll have to get back obviously above this blue line here at 69, and then back probably into the opening range here around above 70 to facilitate an upside turnaround. Now, are they too bearish to do that? Doesn't seem to be. The 30-minute has not rolled over into a bearish algorithm yet. So I don't know. It seems to me that they would be strong. Look at that. They're pulling back substantially back to that bottoming area that I had identified. And that would have been a good trade. They ramped them up to 67, so it would have been a nice couple points gain there. Surprised they're not doing a little better on the upside turnaround here. I think we're pretty close to something, but the Bears are kind of coming back in here and really working their deal, aren't they? All right, let's see if they can support them in here. They try to ramp them back up. Still looking for this support to come in here. I'm not going to bottom fish it though. I just don't feel like it right now because the reason is mainly, normally I would, but we had this big blow up in the markets yesterday. They raised the interest rates, right? And everybody's like, for some reason, it was like a big celebration rally at the close, which might have, it looked like it was kind of a Fed rig deal so that people would think raising interest rates is good for the market or something. And so now we're getting a very slight pullback. You can see just down 40 on the Dow, but look at that NAS taking off lower here. And on a percentage wise, NAS is actually not as weak on the cash as the Dow Jones Industrial. Dow's down 0.27, NAS 0.06, and we got a divergence with the transportation index up 0.18%. Often when you get a divergence with the transportation, follow the transportation index because that's where it'll tend to, the support will tend to come in there. So, keeping that in mind, okay, here, keeping that in mind, let's go ahead and try to see if we can catch a bottom here. All right, stay ready. Let's go ahead and go long right here at the market, going long at the market, 56 half, 56 quarter, 56 quarter, 56 half, 56 even. Now let's see if they can pop them up above 57. long at 56.75. So let's use 60 as our target. 60 is going to be our target for an exit. Actually, let's move this up to 62. 62. Let's see if we can jump them up above 60 now. Get them going above 60 and ramp them up to 62. A little more weakness kicking in here. Let's give it a chance. Let's see if we can get 57 popping higher here and getting them ramping up a little bit. They're still kind of weak. They just don't seem to be fully ready to turn around, but that could come out of nowhere. So let's see if we can get 57, 58 to pop higher here and get the thing moving up for us. Let's see if we can get this thing ramping up a little bit, get them going on the upside. Watching for 57 and then ideally 58 to pop higher, like a breakout above 58, signaling that they want to at least jump up to 60 here. It's kind of weak, but let's see if we can get 58 to break out and run them up to 60. And then if that indeed does happen, we'll watch for a run up as high as 62. But I got my finger in the trigger because they're not responding as strong as I'd like to see here. Let's see if we can get 58 breaking out with some real conviction, like a real pop to the upside here. We're just not getting that action, so we may cut the trade any time here. I'm trying to hold out. They should be ready to move up some here. So let's give it a little patience, see if we can get 58 to really pop. I mean, really jump up towards 60. That's what I want to see to really confirm the trade to 62. Let's see if we can really get them to pop here. Like leap above 69, 50, 70, 60. That's what we need to see. Still not getting it. We're just not getting that conviction jump here. Let's see if we can jump them up a little bit higher here. Let's see if we can get this thing really pumping up here. Get them jumping up above 69.5. There it is, and then 60, and then jumping 60 up to 62. That's what we want to see here. Let's go ahead and exit at the market right here. Exit right here at the market. 9/4, 9.5, 60 even. They're going to 62. I'm just using some basic reaction things I'm seeing here. I still think they're going to 62, but I just wanted to get out a little bit early there. So we got out at somewhere between 59/4, 59.50, somewhere in there. So that was a good deal. Long at 56. Oh, let me write this down here. We had that first trade for +3, 56.75, and out at 59. There's 62 coming in there. I should have waited, of course, but the signs I was getting was that they might falter a little bit. So 56.75 long and out at 59. Quarter. Now you might have got a little better fill because I remember they pulled back right when I called it a little bit towards 56, and you might have got maybe a tick or two higher. It just depends. Normally, though, you should have got within that range there. So let me compare that with mine. 7. Yep, just right. So plus 250 on that deal. Remember, we're just trying to build up 8 to 15 NAS points, so it's not like we have to shoot for the moon on any of these trades. That doesn't really matter. We're very specific in what we're doing. We're not looking to catch the big move or any of that stuff. Just looking for just to chip away here. So 73.5 on that first one. I just write this down. 73.5 and 76.5. Or I'm sorry, we were short. 76.5 going short, and then we covered them up at 73.5. +3 and plus 250 in this. So that puts us up plus 550 so far. And yeah, obviously I should have held it. I really thought we were bottoming down there. So we did catch that bottom and just took a minor scalp on the way up. Obviously would have been nice to hold them a little bit longer, but we're going to be looking for Let's see what we got here. We'll be looking for a long trade if I get the right signals here. Gotta wait and see here. Let's see if we get some certain changes I'm looking for to possibly go long. They still look like they might even get hit with a little more selling from up at this level, but I'm just watching. We may get a long trade going here. Just being real conservative today because I just feel like that, and also um, we're still watching to see how the market's reacting to this quarter. It's been 6 years since they've raised interest rates or done anything like that, so it's kind of a big deal. You know, it's kind of a big deal. So, will the reaction continue bullish? Will the reaction turn negative? We don't know. We don't know yet. So I'm getting some supportive signs here so far, but it strikes me that there could be like a sort of a shock pullback coming in. I just don't want to get. Okay, here we go. Here we go. I'm going to leave it alone for a minute here. We might get a little bit of a pullback going, and then we'll see what the reaction is. If they take off and keep going higher, then we'll have missed a long trade. But I get the feeling that we might get some kind of pullback from this area first. So let's see what happens if that's the case, and if the market, levels out a little, or if there is a kind of a shock pullback here, knocking them back down towards 61 or something. By shock, I don't mean we're shocked or anybody might be shocked by it, but a lot of people here were thinking that the market's going to get all bullish and maybe turn up now. We caught a minor turn up, which is what we're looking for. But if they drop them back to 61, it'll cause traders to kind of scratch their heads a little and go, hey, wait a minute. But look at this. They're going against a very steep dynamic trend band, so it would not be surprising to see the market dip back down towards the DTB under 62 here. So that's why I didn't get long. I didn't have all my signals intact for a long trade there. But let's get ready to go long though. I'd like to go long if we can here. Let's go ahead and go. Wait a second. Wait a second. There's that shock drop I was talking about. Yeah, they're roasting them out here a little bit first. That's why I didn't go long, and that's why, well, technically I should have shorted them there, but that's okay. Yeah, there's still need a little work here. So we're just leaving them alone here. Like I said, I cut the long trade off the bottom a little early, and I didn't short this one up here, even though you heard me call that's a shock drop. It actually ends up, it is turning into a shock drop. That's what I had anticipated. So we didn't trade that. I'm trying, like I said, those of you who've been in the room for quite some time, many of you have been in here over a year, I know. Um, you are seeing me being a little more conservative today. Normally I would aggressively go after these trades, but I'm just want to see how the mop flops with this day after the interest raise deal, you know? Let's see how that goes. This is like the first reaction is a strong downside move off the opening. So that so much for, but at a certain level after Globex rise here, that lets the bears thinking, oh, higher interest rates, bearish, lets the bears kind of get their way here off the first day after. Then they try to ramp them up, and then we get this shock drop, which I had called there. Now the reaction to the drop is very important. And it looks like overall they want to continue lower. The actual low 53.5. So I don't know. It looks like they may want to continue lower, but I'm just still waiting a little bit. Not too anxious to have a viewpoint here. And again, it's because of this special circumstance that occurred yesterday. Still got to see how what the market thinks about that. The initial reaction could have just been probably was a Fed rig job on the upside. Like, don't worry, it's fine. We raised interest rates, but that's cool. Everything's great. I don't know. Let's see here. Okay, now we're getting a little reaction here. Good to see, good to see. Just whipsaw now. And usually, I would say about 70% of the time when you get a strong one-sided move like this here, you're going to get whipsaw off the move. You're not going to get just a straight reversal shot, but you're going to get some whipsaw first. So now we're watching to see if we may be close to that upside reversal attempt. Just waiting for all my indicators to line up to let us know when would be a good time to do that. There's no hurry to do anything. We just got to let the market set up naturally, and it's starting to do that now. But we just wait a little bit longer because we got this 5 and 13-minute chart kind of okay, here we go. So let's see here. Okay, let's do this. Let's go ahead and go long at the market right here. Going long at 62.50, 62.75. We're going long at 62.75, 62.50 area. And let's see if we can ramp them up to 67 here. On that dip, right when I called it, your long between 62.50 and 64. So let's use 64, and let's see if we can get a ramp up to 67 going here. Let's see if we can power punch them up to 67 and close out the trade at 67. There it is. There it is. Exit at the market. Okay, they're filled. We had a trade through, so we're out at 67. So long at 64, which would have been your furthest, and then right when I called it, they dipped down. You can see you can't quite see it on this candle here. You can see it all right, but 62 it was in the middle of this one. Anyway, mission accomplished, which is all that matters. Long at 64, out at 67 for plus 3 points. All right, well, that puts us up plus 850. So now this is very important. I know we've only been trading a half an hour and everything, but I want to re-emphasize to everyone here. What I do is I mark a big red dot on there. and then I pause. No matter where the market's going, I pause and I let you know this is a first warning. Our goal is 8 to 15 Nasdaq points. So we just achieved approximately 850 gains. So that's the first level. If let me and I stop and I do an analysis now. 8.50 times 20 bucks a contract for Nasdaq. If you're trading one contract, I break it down into one contract. Then you multiply it out, whether you're doing 2 to 4 to 8 to 20, whatever it is. We have some large traders in the room here. So 8.50 times 20 bucks is $170. Now on three trades on one contract, regular retail is about $4 and then double that for auto trades. So 3 times 4, I'll just do it on the retail side. 3 times 4 is minus 12. So you're up $158 per contract. You see that? And I usually base it on 4 contracts, which is what I call the blue collar working traders. So 4 contracts is $632. So if you traded 4 contracts with us today, you're up very close to $632. And like I said, this is the first warning. I'll make some more trades, but first, I like to call it a warning because I like to take it really serious, is that's a really, really good paycheck. We're in a very high risk business, and we're not sitting here. We don't come to work here every day to sit and grind the market out all day long and catch all the moves and try to catch the big moves. These are fantasies of the amateurs, to sit in a room all day and trade away at everything. Just expose yourself to all this high risk and tension and catch all the big moves, right? Catch the bottoms and the tops and the big moves. That's madness. That's why you hear it all over the place, except you hear it in the instructional futures places, but never on TV or any of the ads, And that is that, and I can tell you from experience, all futures traders lose all their money 2 to 3 times over. And if they're serious about the business, they keep coming back and trying again, and they go back and work somewhere else and refund. Finally, they get stable, and then they may go on a steady break-even syndrome for a couple years, and then maybe if they really work hard and lose all the weekends studying the markets, and maybe lose a family along the way sometimes. I'm just being honest. This is how it can really go. Then they get good. But what I've discovered after 25 years of trading is that's the markets using you because of the fantasies you might have about trading to convince you that you're supposed to catch all the big moves, and if you don't, you're just a complete dumb idiot, and which is completely ridiculous. Such a high risk business. And then if you don't come in and trade the whole day, you're just like a wimp or something. It's all an illusion. It's what I call the illusion of the markets. That was my first live seminar I did back in San Diego in 2002. We had about 150 people show up, and it was called the illusion of the markets. We had a magician there and get some great tricks. With the pretty gals were disappearing everywhere and then showing up again on the other side of the room. He was really good. That's why I hired him, because I was trying to make a theme to the traders that the markets are an illusion. You have to stand back and say, what do you really want to do? So we've developed this idea that's unique in the trading room industry, the live trading industry, and that's called the blue collar working trader. And that simply means we're not trying to be, the big millionaire trader or anything. We're just coming to work every day and trying to carve out a really decent paycheck. Now, if you average, we made $632 here. If you average $800 a day, and you can see how you can do it in our room with 4 contracts, an average of $800 a day, and taking the whole month of December off, that's a $200,000 a year income. My God, that's pretty darn good for staying at home, right? So that's how we don't let the market use us. We use the market. Do you see my point? So give me a second. I'll be right back. Okay, you can see that what we're getting now is a response. I think overall the market's bullish rolling into Christmas. That's just kind of a guess. That's why I took the hedge off 2 days ago on the S Dow. I was using this S Dow here as to hedge the portfolio, which is a triple short on the Dow, and we made some good money on that. But it was just meant as a hedge, and it served that purpose, and we made a little money on that deal. And I'm just kind of overall looking at the stuff around here, and I don't have enough data to make a short-term forecast, but it looks to me that we could get a Christmas rally into the end of the month here. This day is going to be the first example of that if we get kind of a weaker pullback here today and it kind of stabilizes. Look at that advanced decline line is flat, so that's not bleeding anywhere. And what we're getting is after this strong pullback, we're getting just a reaction on the choppiness here. So this is our first day after the interest raise, and they're not blasting the market lower. And a lot of the people who think that the market's supposed to go lower because they raised interest rates are scratching their heads. And the end result is just a lot of choppiness. Now they may still end up going lower and getting blasted, but it looks to me like we're either going to get a natural rally into Christmas, or the Fed may help it out and stage some kind of rally. We'll have to see what happens. Right now, it's just all whipsaw and choppiness. We're getting a matching dynamic trend band, so theoretically, there should be a short here around 59, moving lower down towards 56, but I'm not going to take the trade. We'll just let the whipsaw proceed. They have crossed over on the buy side, so we'll watch and see where the market goes from here. And so good job here today, up $632 on a blue collar working trader account. That's an excellent deal. It's a 10-12% return, and that's a very good deal for us. And so just sit tight, and I'll be back in a bit.